Hello and welcome to the Morningstar series, Why Should I Invest With You? I'm Emma Wall and I'm here today with Anthony Cross, manager of the Liontrust Special Situations Fund. Hello, Anthony.
Hello there.
So this fund, is bronze rated by Morningstar analysts, which means we really believe and have conviction in your process and the people. But one of those pieces is performance. And if we look back over the last 5 years, this fund has had 20% returns, 20% returns, even 40% returns in 2009. But then last year, only 1.6% returns to investors. What happened last year?
Well, last year the market was pretty flat. And although the fund is not exactly, of course, like the all-share, it's quite different. You know, if the equity market is strong, the fund will be strong. And likewise, if the equity markets are not that strong, the fund will perhaps buck that, but it can't buck it completely.
I think the problem sometimes with the investing environment that we're in, ever since the global recession, is people become quite obsessed with short-term performance and forget to look at the long-term and indeed to the future. Yeah. So with that in mind, is the new norm just lower returns because we've had this fantastic rally coming out of a recession?
I don't think the new norm will be necessarily lower returns, but what you can see is volatile returns. You know, investing in equities is a long-term game. Some years will be great, some years will be flat, some years will be down, but net over time you should be able to grind out some really quite nice returns, and that's the joy of equity investing. And
your fund, of course, is an unconstrained fund, which means you and your co-manager are able to invest from small caps right down to up to large caps. Where are you seeing the greatest opportunities at the moment?
Well, probably back in small caps again. You know, small caps had some very strong performance. They've now underperformed for a bit. They are looking cheaper, therefore, and we're seeing some quite interesting new companies come to the market which fit our style. So probably back in small cap is where we see some of the more exciting opportunities.
And this just goes to show how cyclical everything is, because 2012, mid caps were the best performing of all markets, and your fund did extremely well that year. Yeah. Is this then a case of normally those sorts of stocks do very well in a recovery, but we are recovered now? So why is it that those opportunities are there?
It's more the opportunities actually below the FTSE 250. So below the mid cap and down in the small cap level. What you find, there are a lot of companies actually that aren't particularly allied into general economic growth. What they have is new emerging industries and often nice niche areas with strong structural growth going on. So they don't actually require amazing economic growth for them to grow themselves. And that's where I think, you know, the exciting stocks are.
And this plays quite well into your process, isn't it? Which is that you like intangible assets, those things that perhaps the average investor can't see on the books. So perhaps you could explain a little bit more about that.
Yeah, I mean, we're huge believers in finding companies with strong barriers to competition and pricing power. And it's our belief that you gain pricing power and your barriers to competition through exploiting intangible assets. Assets such as intellectual property, distribution networks, high recurring income, the value of your contracts, the value of your order books. If we find companies with those sort of characteristics and perhaps brands and customer relationships, these are the sort of companies that have got the barrier to competition that gives them the pricing power and then the ability to compound out earnings over a long period of time.
You talked about distribution there. One of the big things coming up on the macro horizon is the possibility of Brexit, Britain leaving the EU. Yeah. Europe is the UK's biggest revenue stream, yes, especially with larger caps. Yeah. How much of that is a concern to you?
It's not actually a huge concern. I think that, you know, if we were to exit the EU, it would have been via a negotiation. We would have come out and we will then perhaps be able to set up trade deals, as you would see with other countries like Norway. And actually the UK could then do trade deals themselves around the world without having to piggyback on the general EU trade deals. So I'm not personally keen on leaving the euro or the Eurozone, but I don't think it's the end of the world if we do either.
So we won't see sort of return to old where it becomes very expensive to do business in Europe?
I don't think so, no. I think we are an important market for Europe. I think we could set up some very good trade deals ourselves. But overall, I'm not pro it, but I'm just pointing out that I don't think it is a complete nightmare for investors in the market.
Anthony, thank you very much.
Thank you.
This is Emma Wall from Morningstar. Thank you for watching.